Hey everyone! Welcome to Trader Tech Views. Today, we're going over a powerful option strategy for those looking to own the TQQQ ETF at a discount and then generate consistent income. This is the put ratio spread on TQQQ, a leveraged NASDAQ ETF, and our target is to potentially buy TQQQ at nearly half of its current price. If that sounds intriguing, keep watching. Let's break down this strategy. Right now, TQQQ is trading around $76, but we're looking at a way to possibly own it for much less. Here's how we do it. We're setting up a put ratio spread by buying a long-term put at a $40 strike price and selling two puts at the $35 strike, all expiring in June 2025. This setup gives us an upfront credit of $198 and allows us to potentially buy TQQQ at $35 per share instead of the current price of $76. That's a discount of more than 50%. If TQQQ does drop to these levels by expiration, we're prepared to take delivery of shares at $35, giving us a chance to own this ETF at a steep discount. So why choose the put ratio spread with the goal of buying TQQQ at a discount? Here are the main reasons. We're effectively setting ourselves up to own TQQQ at $35, or half the current price. For a leveraged ETF like TQQQ, which can see big moves, this is an ideal way to get in at a much lower cost. Once we own TQQQ at $35, we can then sell covered calls against those shares, generating ongoing income while we hold. Selling covered calls lets us take advantage of the ETF's volatility to collect premiums regularly. Let's break down the potential outcomes based on where TQQQ's price lands at expiration in June 2025. Scenario 1. TQQQ stays above $40. If TQQQ stays above $40, our puts will expire worthless, and we get to keep the net credit of $198. That's our profit, with no need to take delivery of the shares. In this scenario, we don't own TQQQ, but we've still made a profit from the premium collected. Scenario 2. TQQQ drops to between $35 and $40. If TQQQ falls to between $35 and $40, we get assigned on the $35 puts, which means we end up owning TQQQ at $35 per share. This is a great outcome if you wanted to own TQQQ at a discount anyway. We're now ready to start selling covered calls to generate additional income on these shares. Scenario 3. TQQQ falls below $35. If TQQQ drops sharply below $35, we are happy to take delivery of this fantastic ETF. But chances are very less. Once we own the stock, we can sell covered calls and start earning premium again. Let's go over the main advantages of this approach. Potential to buy at half price. With TQQQ trading at $76, this strategy gives you a chance to buy at $35, a steep discount and a great entry point for those bullish on TQQQ long-term. Upfront credit. We start this trade with a credit of $198, which reduces our overall cost basis on the shares if they're assigned. Income opportunity with covered calls. Once you own TQQQ at $35, you can sell covered calls at higher strikes, collecting additional premium and creating a steady income stream. This helps offset your initial investment and lowers your cost basis over time. Exit strategy. Let's quickly review the exit strategies. Close early for profit. If TQQQ doesn't drop too much and the premium collected has decayed, you could close the trade early, capturing most of the credit without taking assignment. Hold for assignment. If you're comfortable owning TQQQ and it's trading near $35 at expiration, let the trade play out and be prepared to take delivery. Then, start selling covered calls to create consistent income. The actual idea is to never make a loss. We either need the ETF at deep discount or we need the premiums. For a margin or around $350, the max gain is about $698, that is doubling the investment. Even if we pocket the whole premium, it's about 55% of the deployed capital. So in all the ways, this is going to be a no-loss strategy. And that's the TQQQ put ratio spread. This strategy gives you a way to potentially buy TQQQ at half its current price while earning upfront credit. Plus, if you do end up with the shares, you can start selling covered calls to generate passive income. Disclaimer: This video is for educational and informational purposes only. Always consult with a qualified financial advisor or do your own research before implementing any investment strategy. If you're interested in more strategies like this or want to learn about options income, make sure to hit that subscribe button, give this video a thumbs up, and let us know in the comments what you think about this strategy.